Right. What's going on, boys? How you doing? Hamza, Andrew, Ricky, Ginger, Hamza. Same people usually on post market, and the same people are getting much better at trading. If you guys noticed. So let's just go over a couple of things. Great day for MSL. Obviously, the market's up, down, up, down. One day it's up, one day it's down. What's up, Carlos? How you doing? And basically, right now, it's still day to day. As you guys see from the title, still day to day trading. Why do I say that? Look at this. So, we had a huge dump on April 14th, morning star pattern on April 18th, which was Monday. Yesterday, morning star carried out. Today, SPY did hold higher, guys. So, we did go high. We did take out yesterday's high. We did hold the 8-day moving average right now on SPY. We're squished between the 8-day, the 21-day, and the 200-day, with the 50-day much lower. So right now, the main levels would probably be the 8-day moving average, which is at 44330. 44330 is the 8-day. 200-day moving average is at 44854. So those should be the two big thick lines on your screens. So just put a line right at 200-day moving average and put a line at the 8-day moving average, and basically those are the biggest lines. So even if you put the intraday levels, just make these a little bit bigger, as you guys can see, so you know that on the daily charts that's where you're looking for breakout or breakdown. Other than that, I mean, kind of choppy day, but we crushed it. I mean, we hit bank calls in the morning. We hit the Walmart calls for 100%. Hit a bunch of puts. The Nvidia calls probably work out, but I wasn't too confident holding tech calls overnight. So that was more of a day trade that didn't really rip, and we sold for a little bit of green, so not a bad trade at all. Other than that, let's see where we go tomorrow. We are pinched between the moving averages, as I said. We have major support underneath, major resistance over top. So basically, day trading is great right now. G Money is a great example of what's going on. He went from puts to calls to puts to calls and nailed almost every single one. QQQ was noticeably weak today, guys. That's one thing. So whereas SPY took out yesterday's high and closed almost at yesterday's high, as you guys see here, that's because of strength in banks. That's not because of tech. Tech closed near the low of the day. We completely gave back almost more than half the move from yesterday. And as you guys see here, it's red, red, green, red, green, green, red. So it's just complete chop in tech. That's why I do not like holding calls at all. And there's not low volume, guys. The red days have higher volume than the green days. That's noticeable. I told you guys on small green volume, we can go up. But when you want real selling, you need these big sell bars. That means real sellers are coming, not just people covering their shorts. So let's see if we get more real selling volume in the Qs, and tech does look weak. I do not like tech long yet because of the yields. I mean, this is like, I showed you guys all these yields, all these UB bonds, everything that correlates with tech. As you guys see here, TNX just on a tear. Higher yields are not good for tech, and eventually it will catch up. UB is another one. These are bonds. Look how they've been dumping. Usually these are very correlated. Right now, bonds are just getting destroyed, whereas tech is holding up. So that either bonds come up or tech comes down. It's got to be one or the other. And let's see what happens. We're still kind of just consolidating here. It does look like a bear flag. But if we start breaking up through these levels, 348.50 is the main number. 348.50. So basically, why is 348.50? Because I typed it out there for you guys. 348.50 is the gap fill on QQQ. If we fill that gap and reject, that's a very bearish sign. If we go to that 348.50 and close above, that means they're defending that gap, and we can even go to the next gap, which is at 359.93, so almost 360, guys, which lines up with this fib here as well, 360.19. So other than that, I mean, we're really struggling. We're going sideways here. No clear swing trades, so just play it day to day. My best opinion right now. XLF, huge gap up. Obviously, we consolidated a little, but it is holding much better than tech, as you guys see here. SPY and QQQ are going completely sideways, whereas XLF at least is bouncing here. So we're trying to put in a higher low here. The odds now, because we're so far off 36.65, the odds that it just comes straight down and crashes are very low. It just means the bulls gave themselves a lot of room to set a higher low. So even if XLF does pull back, you look for a higher low than this high right here. Whereas QQQ and SPY, if they want to go down, there's not really that much room. QQQ's low is 335.79. Today low was 339, so about 4 points. It's very easy for tech to just come and lose this low, whereas XLF probably will be range bound even if we pull back. Again, we're just looking for a higher low. Other than that, what's up, G Money? Great trading today, brother. And yeah, so that's basically all I mean. Like QQQ has less room, SPY has less room. SPY even has a little bit more room because of bank strength, but QQQ, we can just go and take out this low immediately. Whereas XLF, we're looking for a higher low on any pullback. IWM, so we hit a couple shorts on this one today as well. Still holding that trend line that I showed you guys. This February 24th, obviously full body of the candles outside. That's the day Russia invaded Ukraine. And it rebounded right away, guys. Went down right back above the support line. So I'm still going to use this support line as my base support. Other than that, again, the same story as XLF. Whereas QQQ only has a little bit of room to set a higher low. IWM has big room. But what I mean by that, again, just in case you don't get it, IWM from this recent low here has gone up to today's high. We are up about 4%, whereas QQQ from that recent low, we are only up, let's see, hopefully this isn't 4% or that would be embarrassing. From that recent low is 3.5%. Yeah, so it's basically the same, but IWM, again, we can even use this low as the low. So let's see if IWM pulls back, XLF pulls back. We'll be looking for a higher low here. We're not expecting it to go straight down and take out these lows. We're looking for a higher low and higher. So let's see if we get a pullback next few days. A lot depends on these earnings that are coming up. VIX just getting destroyed. Today was VIX expiration. As I told you guys, there's 300,000 open interest in VIX calls, which they had to destroy. Obviously, they can't let people get paid. Other than that, we're really under the 200-day moving average, just like we were here. Let's see if we form the same little pattern here on the hourly falling wedge that we watched last time. If we get this same pattern, we know volatility is about to go back. And for right now, it does seem to be forming something along those lines. What do I mean by that? Let's go like this. And it looks like a little descending channel. And now that VIX expiration is out of the way, they won't have to worry about VIX going up. So just draw this little trend line on your hourly charts. If we break over it and close the candle above it. Oh yeah, sure, Isaac. Just give me a second. So this is a channel. As long as the hourly breaks above it and holds above it, we should be in for some more volatility. I usually just watch the hourly channel. Oh my God, CVNA. So today I took the $65 puts just based on used cars. They don't have good sales right now. Took the $65 puts at 55 cents. I was gonna hold it overnight. Obviously we need a huge move for a payout on that one. But that's why it was a lotto, right? I just took a huge lotto basically based on this Netflix. Like if Netflix can go down 35% and lose $50 billion plus of market cap in a day, why can't CVNA, right? Netflix is back. If you are a stockholder in Netflix, basically if you bought any time after January of 2018, you're underwater right now. So from 2017, the investors in stock are the only ones that are still green on Netflix stock. That's how wicked this market is. That's how important it is to use stop losses. That's why all the warnings I give you about tech stocks are there because of this kind of situation. Now, if Tesla tanks earnings today as well, it's going to happen to a lot of stocks. Other than that, let's see where CVNA opens tomorrow. I got 100% on the puts. I'll take it. Like, why do I need to take that extra risk, right? Other than that, Walmart, great play. Congrats if you followed me. 160 calls went over 100% today, and I am planning on rolling them out. Walmart is not tech. Walmart is a great company, great recession stock. People are not going to stop shopping at Walmart even if we have a recession. So that's some of my reasoning. Those are the calls I'm very comfortable holding overnight. Tech, not so much. Other than that, Yash pointed out this chart to me, so I'm gonna give credit to him. Great call out. I looked at the chart one time. The daily was looking like a daily breakout. Weekly was looking like an all-time breakout. And the monthly was even looking like an all-time high breakout was happening. And look at the follow-through we got. So great play on Walmart. I think it keeps going. I will look to roll out. Hopefully for Yash, it gaps up tomorrow again. I still have a few calls because they're next week's, and we'll see what happens. Netflix, CLF. CLF still struggling with the same resistances. Huge pop this morning, but it showed it wasn't ready. So there's nothing wrong with this chart still, in my opinion. The fibs are not lying. It's holding every level. It's just consolidating, guys. Obviously, if it goes, this stock, it's a commodity stock for steel. It has moved from there to there. So CLF has moved about 88% in about 2 months, guys. So 88% move up in 2 months. It's not a small thing. It needs consolidation, and that's exactly what you're seeing here is healthy consolidation. Another reason I like the play on equity was because of the weekly chart. What do I mean by that? Let's go in. Why is everything so... This VCP. So if you guys know, I talk about the volume contraction pattern a lot. What does it mean? It means after a healthy run, when the stock is bull flagging, if the volume is falling off, that means people are accumulating for the next move. There's not real sellers. There's only some people taking profits and getting ready for the next move up. So CLF perfectly fine. I'm still holding. Whoa, Tesla rip. Okay, so Tesla looks good. So far, I think their earnings call is in 4 minutes. I want to listen to it, so I'm going to be quick here. 1026, so absolutely just gave back today's move. Everyone that's bullish on Tesla, it dumped 51 points today and it gained 51 points so far in the post market. So it's not that great, but obviously the earnings were something good, because in this market for a stock to go up after earnings is a big deal. So let's see what happens by open tomorrow. BTC has lost one key resistance that I was watching. I took a little bit of crypto long last night. We have a very clear ascending support here. If that breaks, I'll be all out completely. Other than that, we rejected the 50-day and the 21-day moving averages. Perfectly normal for the first test. I mean, we are up about 2,000 points going into those moving averages. So now we're just kind of going sideways. And basically, if Bitcoin gets over these moving averages, it can really run. But the thing I want to see is I want to see it get back over this line. If it doesn't get back over 41,500-ish, I got to get out of my small cryptos that I added last night, and it'll be risk off in the market once again. I'm going to give it a couple of days, see what happens. Nvidia, ugly, right of green. I mean, we bought them at 209. I sold them at 212, so it covers my commissions. It's not a winning trade, not a losing trade. But anytime you can sell for break even or a small loss, I consider that a win. So let's see where Nvidia opens tomorrow. You can see the bottom of this 30-minute candle was exactly at 212. You see that up there? 212 on the dot, bounced, jumped in the calls. They went up quite nice. Didn't take my profits. Bookie did, so good job. I was looking for a bigger move off 212, but obviously I got this candle at the 8-day moving average right here. We couldn't close above it all day, so I got out of them for just about break even, let's call it. Right down, and then just struggled with the same thing every day. Like, look at every 30 minutes. 30-minute chart couldn't be clearer. Gapped up, lost the 8-day moving average, bounced up to VWAP, didn't get the 8-day again, bounced down, bounced up again, tried it 3 times, no wick, closed over the 8-day moving average, and right back down. That was my sign that it's not strong, it's not ready yet. So that's why I stayed out of that one. One play I want you guys to watch, obviously Friday's earnings, so it's very tough entering here, but just watch it for weakness. If they have any type of weakness in earnings, this one can come right back down. There's a lot of factors saying AXP has topped out at this resistance. You guys seen this exact same chart. Does anyone remember where I showed this exact same chart on a different stock on post market? Since maybe you guys don't remember, but let me show you here. Does that not look very, very similar to AXP? So we get a high, pull back, get a lower high, pull back, and get a lower high, pull back. Very clear resistance, and look at the move we got off it. AXP, exact same chart setting up here, guys. So keep an eye on AXP for puts. I'm looking at May puts for this one. But the only thing that I hate is that earnings are getting in the way. I hate trading earnings. And another thing, so Minkus, you asked about the wicks or the body. Where do I draw the trend line? I draw the trend line personally where the trend line lines up the most. It's not like I'm gonna draw only wicks. Like if I draw only wicks here, it makes sense as well. But I'm gonna see where the trend line adds up the most. So if I can touch almost all of them and it makes sense, I'll use the bodies, I'll use the wicks. I don't really think one is more important than the other. Sometimes these wicks can work as like day traders are scalping the stock intraday and the bodies are the real candles. But for me personally, I just use where it touches the trend line the most. So see here on AXP, you can draw it back here and it almost touches every single high, right? And the body of the candle closes below it on all of them except for this one right here. So basically wherever the trend line makes the most sense is where I draw it. It doesn't matter if it's body or wicks. Like I'll have trend lines on all these charts. You can go through them. Sometimes they're on the body, sometimes they're on the wick. See these supports, you see wicks are passing through them, but at the same time the body of the candle is almost always above it. So it just lines up perfectly. So that's my thoughts on wicks and bodies. I know it's a very controversial subject. A lot of people are like only bodies, only wicks. I just use wherever it touches the line the most, and that lines it up for me. As you guys see here on this little down channel that we had on the video, you have the wick touching it first, you have the body touching it next, right? Wick touching it, and then same thing, like wick, body, whatever makes the most sense. And you guys seen when we broke out of this channel, look at the rip we got. So this is basically my daily NVIDIA right here. We have support on this bottom channel back test, and we have resistance up here at 286-ish. Other than that, I hope you guys had a great day. Let's check in one more time on Tesla, because Tesla, very important for tomorrow. It looks okay. I mean, let's see where it opens tomorrow. Whoa, that was a crazy candle. CVNA getting destroyed, 72.50. My 65 puts probably would have been up a lot more, but no risk, no worries. We'll jump back in tomorrow. Let's see what happens. Hope you guys had a great day, and I'll see you guys tomorrow.